From the morning reading, all 9 sectors moved higher on Tuesday. XLY, XLI, and XLV were the strongest sectors, while XLU was the weakest sector. Oil rose 10 cents to close at $29.12. You had QQQ, SPY, and IWM horizontal breakouts. Diamond horizontal breakout setup. Breadth strengthened as advancers led decliners 4.32 to 1 on the New York Stock Exchange, and decliners led 3.54 to 1 on the NASDAQ. Since 1950, the S&P has managed to rally at least 1% on the day before and after an exchange holiday 11 times. It led to short-term weakness most of the time, with the S&P adding to its gains over the next 4 sessions only 2 times. When the holiday was a Monday, then the rest of the week was positive only once out of 6 attempts, suggesting a seasonal headwind for buyers. If you take a look at the forecast by some of the major asset management houses, there's some 17 of them. I averaged those forecasts out for 2016 on the S&P. The average forecast came in at just under 1% increase for 2016, indicating a relatively modest expectation by these asset managers. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:38 a.m. Central Time, and I'm recording this in preparation for the market day of February the 17th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's go ahead and dive into the morning report. And again, another big night. The overnight sessions have just been rocking in the last several weeks. And indeed, last night we had about 13-point improvement as the time of this cut on the S&P futures. This is up almost 0.75%. Russell's futures are up more than 0.75%, as are the NASDAQ futures. The Dow is the relatively the weakest, and they're up about 0.6%. Crude oil up big, up almost 2%, while the euro is on scratch. Bonds are down about 0.25%, and gold is down about 0.25% as well. And overseas action, China up over 1%, Hong Kong going the opposite direction, down 1%, Japan down over 1.3%, Germany up big, up almost 2%, and the United Kingdom up over 1.5%. In terms of U.S. macroeconomic reports for today, you have building permits, PPI, you have FOMC minutes. That'll be the big one for today. Looking ahead for tomorrow, we have Philly Fed manufacturing and the weekly version of the unemployment claims. Crude oil inventories is on a different day this week because of the Monday holiday. Note that it's on Thursday and it's at a little different time than usual. So if you trade crude oil, you need to be careful for that. Also tomorrow you'll have nat gas storage. In terms of current volatility conditions, as you would expect, these are starting to come down. Short-term VIX down below a 22, though the skew has started to pop back up and went up over the warning threshold of 125. IV percentiles for the S&P down to a 44, the Russell at 55, NASDAQ at 52, and the Dow at 50. Most of those are coming down. And while certainly not low, we're kind of around the norm, around that midpoint at this point. We did put in standard deviation moves yesterday on all 4 the U.S. indices, so that's back-to-back days on 3 of the 4 for a close-to-close standard deviation move. In terms of the charts, let's go ahead and take a look at that, and let's go ahead and go to the futures because we have such big action in the overnight, and you see what's happening here. We had, of course, this double bottom, and then the confirmed reversal pattern, and then that's followed through over the holiday and then continued with last night's action. So we're starting to come in. We had some resistance in this area, and it's played around with that for a little bit, but that wasn't a major resistance. Really don't have any major resistance until we start to get up towards these swing highs around 1940. So we'll see if this can continue to make its way. Yesterday's volume and the day before, of course, that was a closed day without the full participation. But yesterday we had full participation, and we did continue this even with a gap. And the volume was, not huge, but on bullish days, we don't necessarily expect huge volume. In fact, the most bullish moves are often day after day of kind of moderate volume and just increasingly moving up. Anyhow, this is quite a reflection of moving from a intraday capitulation, which we swung right here at the double bottom. It's kind of a place you might expect the bulls to step in, and they did. Big intraday swing that confirmed. You have to say that we do have absolutely a short-term confirmed reversal pattern here. Now, as to whether this actually leads to anything, we're still waiting to see what our intermediate term. We don't have a higher high yet. Where all we have is a similar low and no higher high until we get up above this action here in this 1935 plus area on the S&P futures. We do not have a higher high. So this is just a short-term bounce at this point, but a pretty robust one, which can often happen in bear markets. Right now, you're some 100 points off of where you were last Thursday. So in 4 trading sessions and really 3 trading days, you've moved up 100 points on the S&P. In terms of the others, let's go to the Dow. This one was the most defensive coming in. It still hasn't achieved a higher high. NASDAQ's got a lot of work to do to get to a higher high, as does the Russell. So very, very robust, confirmed short-term trend reversals, but still waiting to see if the bulls can actually do something more with this. If you look at VIX, the volatility, of course, big reversal pattern there as well. And then also bonds, also a big reversal pattern there as well. So this is being reflected through all the key markets that we would watch. The other safe haven status was gold, and we've seen definitely a reversal pattern there as well. So, many times when you see these kind of go parabolic, they also blow off and come back hard. And we've seen that certainly with gold and bonds in the last couple trading sessions. Let's go ahead and go to the daily report. Still on, and remember, this is mostly focused on the intermediate term, and we've not had any changes to the intermediate term status yet. We're still phase 1, bear flag, toe in the water. We'll watch, obviously, we'll start to see perhaps that change, and I probably need to double check that on today. IBD status in terms of our portfolio investor posture still has this as market and correction. In fact, the breadth is still woeful. Accumulation distribution score on the S&P chart is still an E. The NASDAQ also an E. GMI index is a 0 out of 6. That sell signal has been placed for right at 2 months now. That author remains very happily 100% in cash and has avoided all the slop. Stock charts, decision point scoreboards, you notice no changes here. Still a sea of red or neutral and only one lone bullish signal. Position sizing opinions remain quite defensive at 0% on the portfolio investor position sizing opinion. The active trader, we actually closed just a shiver below 24. I rounded up and called it 24. We're still at below 50% here, though that will likely change today and move down into this next area where the position sizing opinion would actually go up a little bit to 50 to 75%. Also, if we get another big day today, it's possible that the IBD status could change to confirmed uptrend once again. So we'll see if some of these warning statuses start to ebb. Another one that could change today is the intermediate term market posture, which is still severely bearish with a very bearish sentiment line. Well, the score here on the S&P has been rising and could go over a 20 today if we have strong action, and that would turn this into a weak bullish intermediate term market posture. As it stands right now, you see everything is still either very bearish or severely bearish, all up underneath 20 and 3 of the 4 circumstances. So not a place that's calling for the initiation of new short-term or intermediate-term bullish trades. If we look at our current intermediate trend strength, you can see it is quite weak and well below the 80 threshold that signals weakness for a bull trend. Hedge warning status remains at a 2+. Again, this could come down if we get a strong day today. We've got a couple of our primary signals that are on the verge of coming down a notch, so we could see some change in this, but right now this retains its 2+. In terms of specific warnings, market in decline still present. VIX futures up over 18 still present. Remember, 18 is kind of that threshold where we look at the market being in a bullish stance versus a bearish stance. And this is still decidedly way up over 18 at nearly 24. Distribution day count remains in a market and correction status. VIX phase has been increasing, but again, we'll probably look to change this trend if we continue another day or two coming down. Skew actually just over 125, just barely into the warning status. Current week out expected move has come down some and is now at a 54, but still in the warning status area. New highs, new lows in the New York Stock Exchange, relatively benign yesterday, though we would note that it was certainly biased to the long side. In terms of key intermarket risk aversion indicators, all 5 of those are still flagged as risk off, though there is some improvement, and we could start to see some of these roll up and do crossovers, and again, a next day or two in some of these examples. In terms of sentiment indicators, stocks on short term, sentiment starting to get into that risky area at a 7. As I said, we are up some 100 points without a pullback on the S&P, so we're starting to get into danger on the other side. Fear and greed index has also improved with yesterday's action. We're now up to a 32, so that's just simple fear as opposed to extreme fear, and you see where we were a month ago, a week ago, even yesterday. Pretty significant improvement here on the fear and greed index. In terms of special opinions, option income strategies, covered calls, put selling, no changes here as of yet, though we're starting to get into that place where some of these might start to become less defensive and start sticking a bigger toe and perhaps a whole foot into the water. Aggressive traders certainly are permission to already start some of those actions, but again, this is just a short-term reversal at this point. You have not yet even gotten to where the intermediate-term market posture has turned even weakly bullish. So kind of keep all that in mind and retain your, if for example on covered calls, retain that kind of in-the-money kind of strikes approach. Perhaps legging in maybe a third of position and then scale in more position as the conditions continue to improve. You might want to stay with those lower beta positions. You might want to sell out of the money puts and then be ready to take possession of those stocks. Those are all defensive postures that we would suggest given the current market posture. In terms of sector specific, you can see quite a bit of improvement here now in the short term and intermediate term. They're all at least neutral. though the two that are holding up the best, consumer staples and utilities, you notice are the two defensive sectors. So no changes there. The money still continues to be primarily rotating to the defensive sectors. Bonds, gold, utilities, consumer staples are all the primary departure points or arrival points at this point for money. So that should be telling to you that the institutions are not exactly going gung-ho with piling money into high beta and more aggressive types of sectors at this point. In terms of the percent change for yesterday, we did have a bit of evidence that some of these that have been most damaged were the ones that were responding the best. We'll see if that starts to play through into these longer time frames, and we see evidence of real rotation. Right now we just see a bit of a bounce, and as you would expect, the ones that have been damaged the most are bouncing the hardest, but real rotation in terms of breadth and significant volume coming into these areas, that has not yet been in evidence. I think that's probably enough for today. Let's see what we should focus on. Well, if you want to get emails, we send out a limited number of emails, but there are certainly alerts to the hedge risk level changes and then periodic blog articles and other items of interest. Just go to the website that's shown here, scroll down just a little bit, find this button, click on the button, and then that will allow you to put your name and your email address. That will get you signed up to be on the email distribution. Once you do that, you'll also get a link to the ebook that was I wrote about portfolio strategy, so you might like to see that as well. You can also use your smartphone. Just text Falcon Global, all one word, to the number 22828, and that'll do the same thing for you. Now I'm going to scroll through the rest of these. We just kind of usually pick one each day to kind of focus on. The covered call class, we're in the middle of our current covered call class. I will be teaching this again in the second half of the year, so I will update this to, but you can go to this website to get additional information about that. So we'll do another start probably right after the 4th of July holiday. So it'll be basically a July and August class nestled right in between the Independence Day holiday and the Labor Day holiday to get that put in there. Disclaimers as always, hit the pause button if you need more time to review, and you see the hyperlink down here at the bottom for the full disclaimers. We'll see you back here tomorrow morning with the Falcon Global Market Preview. Good trading.